Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. And speaking of subscribers, if you guys haven't hit that subscribe button yet, go ahead and do that and hit the bell notification so you don't miss any updates. I post a portfolio update Monday through Friday as consistently as possible, unless the market's closed like it was on Monday. So today we're going to go over the overall portfolio. We're going to go over the buying power and the stock that's going to be paying us tonight, as well as the individual holdings and their performance, and the watch list and what I'm actually going to end up buying. I'll be adding the stock that I've chosen at the end of the video. So let's take a look. For today, we're up about $43, up 0.12%. We're up $317.91, up 1% in the past week. For the month, we are up $310.13, up about 0.9%. The 3-month mark, we are up $3,569.83, up 11.35%. We are up $7,486.10, up 27.16% in the past year. And then we are up $8,719.78, up 33.11% since April 13th of 2018. So the portfolio is sitting right above 35K, which I'm not expecting that to stay that way. Fluctuations, it always happens. So right now we're right at about 35K. We have a buying power of 82.71, and my intention for right now is to wait until next week to add more cash to the portfolio. But the reason I'm excited is because Pfizer is actually paying us tonight. So Aflac paid us on Tuesday, and then Pfizer's going to pay us tonight or Friday morning, Thursday night into Friday morning, another $39. So 80, 90, 100, 110, about $120 in the buying power. And that'll stay there until next week when I transfer the money that my regular $550 or whatever I decide. I think it's going to be about $500 over. So I'll have about $620 in the market, and the stock that I'm planning on buying with that will be Coca-Cola, because that's going to be the next month that pays me. But the next month I will be adding another stock, so I won't have 3 stocks that pay me for 3, 6, 9, 12. I'll only have 2 plus Realty Income, so technically 3 stocks will be paying me, but it will be the monthly instead of adding another one for the 3, 6, 9, 12 months. So before the end of the week, we're going to have $120 worth of buying power, which is great to add to our 500 sum that I'll be adding next Thursday into Friday morning. So let's jump right in. First, we got Realty Income, my favorite real estate stock and my second favorite stock in the entire portfolio behind Coca-Cola. 120 shares, $8,400 worth of market value. Average cost is right around $65 a share. 24% of the portfolio is in Realty Income, nearly a fourth of the portfolio. That does not bother me in the slightest. Love this company, very confident in the new acquisition. We're getting a lot more money from mostly the same tenant base, but some new tenants are added, and I think they're very strong. So I like the acquisition that they recently made of VER stock, and I want to pour money into this company because it not only does it pay monthly, it increases quarterly, and I just love the stock. They do acquisitions correctly. We're down about $48 today, up $655, up 8.44%. All time on Realty Income stock, and a dividend coming in of $25.15. The reason I love that number is because it's actually wrong. As you guys can see, we own 120 shares, but I didn't buy them before the X date because AT&T released the news after X date that they would be cutting the dividend. So I poured that money into Realty Income. So I actually am getting about almost $29 worth of passive income from Realty Income every single month. Next, we have Coca-Cola, the stock that I plan on adding about 10 shares to. We have 25 shares right now, so we should have 35 before the end of next week. About $1,400 of market value. Around $52 is our average cost. About 4% of the portfolio is in Coca-Cola. Today we're up 12 cents. Total we're up nearly around $89, almost 90, up nearly 7% on Coca-Cola stock. Then we've got Allstate. 6 shares, about $820 of market value. Average cost is $105.88. 2.34% of the portfolio is in Allstate, down $4.32 today, down about 0.5%. Total, we're up at $184, up 29%. They did just do an acquisition of, Safe Auto, which is another insurer in Illinois. And from what I understand, they're very, very good at what they do. The reason that I'm such a fan of Allstate is because they have a low payout ratio, and that's good for multiple reasons. First of all, it's good for the dividend because that means that they have more free cash to add to that, so they can keep generating income through dividend increases. And more importantly, for the business, so for an investor that's seeking income, like I am, that's a 30% payout ratio around that level is great because it means that there's a lot of room for dividend growth for the foreseeable future. So it gives me a good reason to hold the stock, as well as on top of it for the business. What it means is it can pay the current level of dividend and do smaller increases, and they still have 60% of their free cash, around like 62% of their free cash flow, to pour back into the business to do things like an acquisition for future expansion, for future growth. And that's going to not only keep the company healthy and growing and keep the profits coming in to keep that dividend going, it's also going to expand their footprint, and like they have more, the more acquisitions that they do that are smart are going to benefit the business. If they pay too much for a business, then it's going to, when they acquire it, it's going to hurt the common shareholder. So I like this deal from the metrics that I've seen. I think it's very healthy. They have more than enough cash to cover the deal. It's not like the AT&T thing where they bought Warner with debt and just destroyed the balance sheet. This is healthy. This is a good acquisition. I really do like it, and I think it's going to not only push profits. They already said in the article that the company will be seeing better profit margins from the acquisition within the third quarter. So it's going to be quick. It's going to affect the business quite rapidly, which is good. But that also means, of course, with bigger expansion, a bigger company, more profits, means that the payout ratio is actually going to go lower. So I didn't see a forecast on how long it would take them to technically pay off or break even with buying that company. That I haven't seen that yet. But I do know that it will be bringing substantial growth to the profit margins, which is phenomenal. So happy that Allstate bought Safeco. And I think it's really going to benefit Safe Auto. And I think it's really going to benefit the overall business. So I'm happy as a shareholder that they did it. And I think it will help really push the dividend safety as well. Next, we've got Altria. 152 shares, about $7,500 worth of market value. Average cost is right around $52 a share. About 21.5% of the portfolio is in Altria Group, up $24 today, down about $380, down almost 5% all time on Altria Group. Next, we've got AbbVie. It's one of my personal favorites, but it just doesn't want to come down to my original level. Got 60 shares, $6,700 of market value. Average cost is right around $72 a share. 19% of the portfolio is in AbbVie, up $34.80 today, 0.5%, up almost $2,400, up 55% on AbbVie. I want to buy AbbVie so damn bad, but I can't because it's so, I don't want to say overvalued. Because according to the market, I believe it's like at a 39, which I believe is below the actual market. But I want to buy it around a 15, so I want to buy it about half the price that it's at right now. So I want to, PE ratio wise. So I'm going to wait until it hits around the $100 mark, and that's where I would pull the trigger on on a buy. But I don't want to buy it at these prices. But I love the stock. Next, we got 3N. This was my original replacement for AT&T, but I want to add another one as well to help with that dividend growth. So National Retail Properties only have one share at around $48 a share. $46.37 is our average cost. 0.1% of the portfolio is in 3N National Retail Properties, down 50 cents today, up $1.55, up almost 3.5%. Then we've got Procter. It is a dividend aristocrat. And then we have Procter and Gamble. We have one share, $135.33 for market value. Average cost is right around $137. 0.4% of the portfolio is in Procter and Gamble stock, up $1.88 today, down $1.64. I want this to be one of the bigger positions in the portfolio as a whole. I do want this, honestly, for this set of months. I do want this to pass Abby in the biggest position. Overall, I think this is the best company in this set of months in the entire market, and I do want that to be reflected in my portfolio. This is one of those that I do want to have about a 25% stake in, like a fourth of my portfolio wouldn't bother me. But I also have another stock for this set of months that I want to add. So I do want Procter & Gamble to be big, but given the $135 price tag, I'm going to focus on National Retail Properties for a while, and then I want to add about a share every single time this comes around. So every time the second set of months comes around, I do want to add a share of Procter & Gamble just to keep boosting my stake regardless of price, because I love the company. But I do want to focus more on the other two options that I will be having for this set of months. Then we got Pfizer, 102 shares, about $4,000 of market value. Average cost is right around $39 a share. 11.36% of the portfolio is in Pfizer. $17 we're up today. Total, we're down 43 cents, so we're down $38.96 is our average cost. So it's right at our average price. So I could buy here and get it for pretty much the same, right around the same price right now. Now I could get it at a penny discount. I do want to add more Pfizer, but I love the company, but I like Aflac more, and I think Aflac has more aggressive dividend growth, but I do love Pfizer and the consistency that they provide. Next, and also that dividend, I didn't mention that. The dividend's coming in on the 4th, which I believe is tonight or tomorrow morning. Should be around $40 a share, or $40 from my Pfizer shares, which will be added to Coca-Cola. Because remember, guys, I don't usually investors reinvest dividends into the same stock. I don't do that because it's June, so July, August, September, so I won't see this new share of Pfizer paying me for another 3 months. I would much rather put it into something like Coca-Cola or even Altria and get that money working for me a lot faster, as in the payment hits quicker and I can reallocate that money faster than if I put it into Pfizer. Next, we've got Aflac, 103 shares, $5,900 worth of market value. Average cost is $49.12. About 17% of the portfolio is in Aflac. Today we are up $19.57. Total, we're up $46.47, up about 17% on Aflac stock. This is my favorite insurer on the entire market, and I do want to keep building this position. The dividend growth is phenomenal, and I love the business. So Aflac is going to be one of the bigger positions, specifically the biggest position in this set of months. So with that being said, guys, the watch list doesn't have anything on it currently because I just kicked Kroger off of it. But the stock that I've decided to buy is actually Verizon, because they still get that 5G exposure, and they're a great dividend growth stock. They pay about 63 cents, I believe, so they pay more than what their sticker price is, which is usually what I go for. Meaning they pay about 63 cents, and their cost right now is below $60 a share, so that's what I look for, is a higher dividend than the price when it comes to cents. So like Procter & Gamble should pay like $1.50 for me to be in it, but that's an exception because I love the stock. But yeah, I definitely want Verizon. That 5G exposure, the dividend growth is pretty consistent. I believe they're at like 16 years of growth. I think 5G is going to boom, and I want a piece of that. So I'm going to have 4 stocks that pay me, but technically it's 3 because right now The reason that I'm making this exception, not having a third stock for the third set of months, is simply because AbbVie is so overvalued that I don't want to put any money towards it. So I might as well add something that I want to aggressively add, which is definitely Verizon stock. Nothing against anything in 36912, but just the ratios weren't as great as I would like, and I do want that telecom exposure. I think it's the most dependable utility type stock that we have. People are so attached to their phones and phone service in general. It's one of those no-brainer bills that everybody pays. So I don't like T-Mobile. I have a bad history with AT&T since they cut the dividend. I'm a dividend growth investor, so the second that cut the dividend, it's cut out of the portfolio. So I have faith in Verizon, and I think as long as management doesn't do any bad acquisitions or cut the dividend, I'm cool with the stock and holding it for the next 10 to 20 years. So that'll finish out the portfolio of 10 stocks. And the thing is, guys, with 36912, I'm going to keep adding to O religiously. So that will be the third stock that pays me, and eventually I think it will be, buying me a share of anything I want in the portfolio. So I'm excited for O to get to that like $40 mark. Right now it pays me around $30, so I still will have 3 stocks paying me that month. But anyways, guys, hopefully everybody's having a GGD, and let me know what stocks you guys are looking at buying. Let me know what stock you guys are looking for the 5G, boom that everybody's been talking about. I think Verizon's the leader currently, but I think they had the biggest bid as well when it comes to 5G. But thank you guys so much for watching. We're up above 35K, so I can't be mad about that. And I'll come at you tomorrow with that Pfizer dividend. Remember, like I said, we're going to be waiting until next week when I get paid to transfer that $500 over. So I'll have about $600 total to pour into Coca-Cola stock. So that's the goal, guys. Just going to keep on investing in quality dividend companies. Add my last company here for an even 10, and we're just going to keep on, rinse and repeat, keep adding cash and seeing how far we can go with this dividend growth portfolio. Thank you guys so much for watching. I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.